Okay guys, so welcome back to my YouTube channel, FXBase. I hope you're doing great. So today what I have for you is I have some synthetic indices. That is the volatility 10, volatility 25, and so on, and as well as some jump indexes. So today guys, I'm going to show you a little few tricks or a few methods of actually entering trades. You don't need to be a professional, whether you're a beginner, an intermediate, or a professional. You can actually use this method because it's very simple and it's very easy and it's very basic. So today I'm just going to take you through how to implement that trick, and the trick is actually broken down into two I think method, if I may say. So we have the first method, then we have the second method, but everything is just basic. So I hope you guys enjoy. Make sure to subscribe, comment below, as well as turn on notifications that every time that I post a new video, you are always updated. So okay, so what I have for you today, this is the volatility 25 index. So mostly I like to use the 30 minutes time frame because these indices, they're very volatile. So trading them on a smaller time frame is actually a good idea than other than using those larger time frames, because the margin that is actually required to be a little bit higher, and in terms of the losses or maybe stop losses, it's going to be big if you're using a larger time frame. So what I have is the volatility 25. So as you can see right here, this chart, if you look at this area around here, and also this area around here, and also this area. Okay, let me do this. Okay, this area around here, if you notice something around here, you can see this was a touch, this was a touch, this was a break below, this was a form of a retest, and the trend that actually went to the downside. So let me just remove this. Okay, so the first strategy, I actually have two methods of the same strategy. The first one is to wait for a retest after the trend is after the line has been broken upward, have been broken below. So just wait for the retest. Okay, what am I saying? I'm saying if you see this area, you can put a rectangle around this area. So your trend will be somewhere around here, that is above the trend. So what are we waiting for? We're waiting for this trend to break below and give us this retest around this area. Then we start looking for selling position to the downside. That is the first method that you'll be using. So if you put your line here, okay, so now that you have seen that the trend is broken below this line that we have here, we have broken below, we are actually below, we are waiting for a retest. Once it retests, that is when you have to place your sell position, but you actually don't know which area are you selling up to. You don't know your target, you don't know what you take profit or okay. So what you can do is you can use higher low, this previous higher low to actually determine your target. So on this method, you are using this line to determine where you are selling you are placing your sell position and up to. Okay, so your stop loss will be just above this. Then for me, if the trend was around here, I would place a sell stop around this area. Okay, so you have your sell stop around this area, then your stop loss around this area, then you are targeting this whole move. This will be your target. So you're targeting this whole move. So what are we waiting for? We're waiting for prices to break below, give us a retest, then you can enter our sell positions. But your stop loss is just above this area right here, so it's a tight stop loss, which means the risk that you are actually having on this trade is actually what? Actually low. So we want to look at an area that has been retested 2 or more times before it is broken down below and retested. Then we can actually look for what? For these selling positions. That is what we are going to be doing. So let me show you another example. Okay, so this is our next my next example. As you can see, guys, we are actually looking at this area. This was a touch, then the trend also touched this area, so you can see this area was touched, or this horizontal, this or this triangle was touched a few times before it was what? It was broken below. So we are saying we want 2 touches and above to be able to what? To use this method. So once it is attached 2 or more times, we are waiting for what? For break below. So guys, this method we are using it to find some selling positions. But if you noticed on the previous example that I gave you, you can see that we used a higher low that was an uptrend, then it changed direction, went to a downtrend. But this one we are on a downtrend. So if you can see, last time our trend was coming from around here, then it broken below. But on this one, okay, let me just remove this. But on this one, we are still in a downtrend. Our trend is coming from what? From this area. So how do you come about putting your target? What you can take this trend, put it around here, measure this last impulse to the upside. So it's a downtrend, so you actually use this previous impulse to what? To the upside, then you take it as it is. This is going to be your target. Then you, okay, let me just turn this, turn it like this. Okay, so we broke below, yeah, so we actually put it around this area. So we broke below, we retested. That's where we are starting to what? To measure our the trend that we measured on this area. So this is your target. This will help you to actually set your target. So as you can see, we broke below around this area. This was a retest. This is a small, maybe you may fail to notice this, but if you dial down to the 30 minutes to the 15 minutes time frame, I guess it will be much much clear. So this is your small retest to the to the downside. So you're actually placing your sell stop around here. Guys, don't use market execution, because you don't know what is going to happen. This might not be a retest. This might be a reversal. This might be the trend reversing, maybe going to the to the upside. So use sell stop. Okay, so you're actually placing your trade sell stop around here. Then your stop loss will be around this area. Then your target is actually around around this area. Okay, so you're actually risking this more to gain this whole move. So this is how you use this. Okay, so this is my next example, my second example. So let me just do another one example and show you guys how we are using this strategy to enter trade. Okay, so this is my third example. So as you can see on the last example, we are actually on a downtrend, but now this was an uptrend, which is now changing direction to go to a downtrend. Okay, so if you recall what I showed you on the first example, we are identifying our area. Okay, so as you can see, this area was touched twice. That is from on around here and around this area. So if it was touched twice on this one, how do you actually identify your target? So you are taking this from here. This was the impulse. So we're actually using this target to actually see our target. Okay, so as you can see, once we broken below, let me just correct this, put it around this area. Okay, just correct. So we broken below, then we retested. What are we doing here? Placing our stop loss around this area. Then we are placing our sell stop around this area. Then this is our overall our overall target. So as you can see, the trend actually came down, then it went up, retested again, then it finally came down. So this is how you use you actually utilize this method to look for sell position. Only use it for for identifying this sell position. It's actually easy, guys. This is the method that I have for you. So this is the first method. So now we are moving on to to our second method. But our second method, you don't have to wait for a retest to actually enter enter position. All you just have to do is to identify an area, then you just mark it, then you wait for the area to be broken, then you place you place a trade. Okay, so we are actually here. So let me use this example. So this area, you can see this area was actually touched so many times. So the trend is actually above. So what are we waiting for? We're waiting for it to break below, then we can actually enter our trades. Then our stop loss here will be around this area, as you can see, guys. So we are using the same method to actually identify our our target. So we measure this, we put it around here. Okay, around here, then where the trend start around here. So you're placing your sell position. This is your target. Then this is your this is your target around here. So again on this one you're using pending orders, that is the sell stop. So once no on this one we are actually using market execution. Okay, so you actually wait for a candle to close below, like what we're seeing around here. Or the candle close, and we're actually using a pending order. So you put your sell stop just below this candle, just leave a small gap. So the trend is actually going to go up a little bit, then come down. That is when you're actually going to be to be tagged in the trade. Then it actually goes to the downside. Okay, let me just do a second example on this one. Okay, so guys, if you check here we have this area. Okay, you can see it was touched here and it was touched here. So our target, we are using this first impulse to the upside, or we can use the second. It's okay. Okay, let me use the second one. Then you can take it, put it around here. Okay. Okay, I'll do it like this. Then your stop loss, you can place it around this area, then you enter the trade, but use pending order. So you're actually waiting for this candle that is actually below to close, then you put below, then you can put a sell stop loss, a sell stop pending order. Okay, so it is just easy as that, guys. That is the method that we are using to actually capitalize on these moves. Okay, so let me just do a last example so you guys can actually understand the whole concept of entering the trades using this method. Okay, I think here we can we have an interesting short. Okay, let me just see if this was a retest. Yeah, this was a retest. Let me look for another one. This we're saying the retest, we're using it on the first method. That was the first method. That was the first method that we're using, the retest method. On this one we don't need a retest. Okay, I think here we have a very beautiful structure. Okay, so this is the area, guys. Touched here, touched here, touched here, touched multiple times. What do we do? Okay, so guys, you have to actually pay attention to this impulse. This was an impulse, then it went down, impulsed around here, corrected. So we actually measure an impulse, guys. Don't measure it like this, because here we had an impulse, a retest, an impulse, then maybe some form of a correction. This was an impulse, so we only use an impulse only. So we are going to measure here. This is our what? Our target. It's an impulse only, guys. Don't make sure that you're not measuring also on a retest. So this is our stop loss. You enter your trades here because this candle closed below, so we actually place below this candle because the candle might reverse go up. That's why we are using a pending order, that if it is going our direction, or what we actually take it in. So this is our entry and this is our target. As you can see, guys, the target was actually hit, or most of the time it gets hit. Maybe your TP was missed, it went up a little bit, then it came down, then what it touched it reached the target. So this is what I have for you guys. I hope you learned something or one or two. Guys, make sure I apply this method, but I tested this method on synthetic indices and it's actually working very fine. I'm not so sure about currencies, and I know most of you guys use the TradingView platform to analyze your currency. You can actually try this method and actually see how you can combine it with your trading strategy and to actually maximize profits. Thank you guys for watching. I hope I catch you in the next one. So this is FXBase. Make sure you subscribe, you comment, guys. More content is on its way. So thank you guys for watching. See you in the next one.